If you've been watching the mortgage market closely at all, you already know this. 2025 continues to be another year of big changes. High interest rates, shifts in borrower behavior, and ongoing market volatility mean that what worked before just isn't going to cut it anymore. Today, let's talk about what you should really expect from your lending partners. Not just what's worked in the past, but what you need right now to win in this new reality. First, agency lending isn't enough anymore. For years, agency loans, those conventional programs everyone's familiar with, were the backbone of lending. But in today's market, relying solely on agency lending limits your growth potential. Why? Because origination volumes are still well below pre-pandemic levels, especially when it comes to refinancing. Over 60% of homeowners have a mortgage rate below 4. That means traditional refis and cash outs are far less appealing. But homeowners haven't lost interest in tapping into their equity. In fact, Americans are currently sitting on about $31 trillion of that equity. They just need smarter, more flexible ways to access it without sacrificing those historically low first mortgage rates. Second, borrowers, they're becoming more complex. This is a big one. Today's borrowers are anything but traditional or cookie cutter. Over 40% of home buyers under the age of 45 reported having at least one form of non-W-2 income last year, according to CoreLogic. That means self-employed individuals, gig workers, investors, and people with complex financial profiles are all looking for lending solutions outside of standard guidelines. Think about it. Your client might be a self-employed entrepreneur whose income doesn't neatly fit into traditional underwriting boxes. Or maybe it's an investor looking to qualify based on the rental income of the property they're purchasing or refinancing rather than their own personal income. Maybe it's someone trying to consolidate debt to fund home improvements without disturbing their ultra-low rate first mortgage. These aren't niche situations anymore. They're increasingly common scenarios. Third, non-QM and HELOC products aren't optional. They're essential now. Here's where non-QM and home equity products enter the picture. A few years ago, these were specialized offerings you used occasionally. Now, they're crucial components of a modern lending strategy. In fact, industry forecasts predict that non-QM originations could surpass $45 billion this year alone. Programs like bank statement loans, debt service coverage ratio or DSCR loans, asset utilization, and expanded credit options are growing quickly in demand because they offer real, practical solutions for everyday borrowers. At the same time, HELOCs continue their upward trajectory with many lenders seeing double-digit growth in application volumes year over year. Homeowners want to tap equity efficiently, and HELOCs offer that solution without touching their existing low-rate first mortgages. Fourth, execution matters now more than ever. But product variety alone isn't enough. Today's borrowers, and you as mortgage professionals, expect seamless execution. And you should. In a tight market where every deal counts, speed, clarity, and reliability become critical. Your lending partners must be able to deliver on timelines consistently. You need clear communication, rapid responses, and straightforward, transparent processes. The difference between winning and losing a deal can come down to execution. If your lending partner can't move quickly and predictably, your business suffers. And finally, choosing a lending partner who understands the new reality is of the utmost importance. That's where Arc Home steps in. We understand this evolving market, and our mission is simple: help you adapt, compete, and thrive. At Arc Home, we offer non-QM products designed specifically to address complex borrower scenarios. Our asset utilization loans help high net worth borrowers qualify using liquid assets instead of traditional income documentation. DSCR loans enable real estate investors to qualify based on property income rather than personal finances. Flexible bank statement programs simplify the process for self-employed borrowers, and our expanded HELOC programs give homeowners flexible ways to tap into that equity without sacrificing their favorable and really low first mortgage rates. But products alone don't set us apart. We have a focus on execution. Our processes are designed for speed, consistency, and clarity at every step. When you partner with Arc Home, you don't just expand your product lineup, you gain a reliable ally who's committed to your success. So, what's next? As we move deeper into 2025, one thing remains clear. The market will keep changing. The only constant is change, right? But that's okay. Change creates opportunity. And by aligning with lending partners who offer the right mix of products, the execution that you deserve, and a genuine commitment to your growth, you position yourself to seize every opportunity that comes your way and let nothing fall through the cracks. At Arc Home, we're not just here to lend, we're here to lead together. If you're ready to move beyond traditional lending to embrace the new market reality and grow your business smarter, we'd love to connect. Let's move forward together.